Hello, everyone. Good evening and assalamu alaikum to the distinguished panelists and esteemed participants to the 16th Bidiral monthly webinar. My name is Samir Sohani, your host for today's session, and I'm currently working as a research associate and also playing the role of the acting head of research of the advisory research and training unit of the Bangladesh Rating Agency Limited. So thank you all for joining us for this enlightening discussion on monetary policy and its implications for economic resilience. So before we begin, let me take a moment to introduce our esteemed panel of speakers. We have the privilege to introduce a very eminent professional as our first panelist of this evening. Please welcome Mr. Mohammed Nurul Amin. Mr. Nurul Amin is the independent director and chairman of FAS Finance and Investment Limited. He has over 40 years of experience in banking sector. He was the former CEO of Meghna Bank Limited and NCC Bank Limited. He was also the chairman of Association of Bankers, Bangladesh, ABB, and Primary Dealers, Bangladesh Limited, and Bangladesh Foreign Exchange Dealers Association. So please welcome Mr. Nurul Amin. Sure. We're also very deeply honored to have a very knowledgeable academician, Dr. Pinky Shah. She is currently serving as a professor at the School of Business, University of Liberal Arts, Bangladesh, which is also known as ULAB. She has more than 2 decades of experience in higher education, research, and teaching. She has PhD from India and focused in economics and has been visiting professional at a number of institutes. Dr. Pinky served the role of chairperson for Sexual Harassment Committee and advisor and coordinator of co-curricular and extracurricular activities. In addition, Dr. Pinky is a business mentor, social entrepreneur, and activist. So very, very much welcome, ma'am, to our program. So our next panelist, we are very, very much privileged to have here a very experienced professional. He is MD Amran Hossain, FCA. He's currently working as the Chief Executive Officer in Edison Power Bangladesh Limited and Edison Marson Limited. So he is also the Managing Director of Edison AA Consulting Bangladesh Limited. He is a fellow member of the Institute of Chartered Accountant of Bangladesh. He completed his BBA and MBA from Accounting and Information System from Department of Finance from University of Dhaka. So formerly, he has worked in Siemens Bangladesh Limited. He served as the head of commercial of SCM and head of finance, head of corporate tax or VAT and business administration. So he has also been elected as member of Dhaka Regional Committee of ICAB in 2019 and acted as General Secretary of DRC ICAB in that year. Currently, he is serving as a member of the Information and Communication Technology Committee, Members, Issues, Services, and Welfare Committee, and Career Counseling and Skill Enrichment Board of the Council of the Institution of Chartered Accountant of Bangladesh. Welcome to our program, sir. So last but not the least, we have our Honorable Chief Executive Officer, Dr. Syed Abdullah Mahmood, FCMA. As the moderator of this program, apart from being the CEO of BDRL, Dr. Mamoon is the independent director and chairman of Audit and Finance Committee, Board of Director of Northwest Power Generation Company Limited. He is also an independent director of FAS Finance and Investment Limited. And Dr. Mamoon has earned his PhD in finance from School of Management, Asian Institute of Technology. He has completed BBA and MBA, both from Department of Accounting and Information System of University of Dhaka. Dr. Mamoon is a certified professional cost and management accountant and fellow member of Institute of Cost and Management Accountant of Bangladesh. So we are very, very honored to have such eminent professionals with us today. and who will share their insights on the monetary policy and its implication for economic resilience. So to dive into the discussion, I would like to request Dr. Said Abdullah Al Mahmoud to take the floor. Over to you, sir.
Yeah, thank you. Thank you, Samira. Thank you for your humble introduction. And first of all, I would like to convey my gratitude on behalf of the BDRL team to all of the eminent professionals. And we are really delighted and excited to listen from your expert opinion. And I believe that your sharings will be helpful for all of us for deepening our understanding, and that will also assist us to play our role in a better way. So in this respect, I would like to take advantage to introduce our organization. I think you can see my, Samira, could you confirm the screen? Is it
Sir,
all
yes,
like
we can
visible?
see your screen.
Yeah.
Yes, sir. It's been
So
shared.
the Bangladesh Rating Agency Limited is a subsidiary of the 200 years old Dun & Bradstreet South Asia Middle East Limited company. This is an as a global company, we BDRL work as the subsidiary in Bangladesh, and as part of our commitment to organize the knowledge sharing program, we has different initiatives, and the monthly webinar on the contemporary business and economic issues is one of such an initiatives. And in this month, we have chosen the monetary policy and its implication for the economic resilience. As we all know that through this policy intervention, regulators and the policymakers always try to put the economic direction in the right way, as well as would like to achieve the economic resilience for the country. So from that perspective, we know that we are in such a special context. So in that respect, that policy has very crucial importance in this respect. So that is why we have chosen this topic for discussion. And BDRL, as I mentioned, that is a subsidiary of a global company, and it has been incorporated in Bangladesh 2008, and it is licensed by BSEC as well as accredited by Bangladesh Bank. And it involves in the credit rating, advisory, research, and the training activities. And we are also delighted to have our local shareholders, all other eminent bankers and financial institutions, including like BRAC Bank, IDLC Finance, Mutual Trust Bank, Eastern Bank, National Bank, Southeast Bank, NCC Bank, Bank Asia, and Delta BRAC Housing Finance Limited. So our parent company is Dun & Bradstreet. It's already to mention that it's an almost 200 years old American company, and it is one of the largest company dealings with the more than 200 offices around the world. And at this moment, the Dun & Bradstreet has more than 520 million business records, having the service capability of approximately the base is 150,000, and almost 90% of Fortune 500 company rely on the DNB data. And the legacy of the Dun & Bradstreet is very glorious, that 4 former president of the America were the employee of the Dun & Bradstreet. And Dun & Bradstreet South Asia Middle East looks after the business of the 67 markets of the South Asia, Middle East, and Africa. Mainly there are 7 set of service area. We look for risk management, rating agency, credit bureau, sales, marketing solution, economic analysis group, research advisory, and the fintech solution. So BDRL exclusively focuses on this four set of activities. It looks after the credit rating, advisory services, and we have some research and publication, and we also disseminate some training relevant to the financial statement analysis, risk management, credit rating, and business and strategic analysis. So our credit rating ranges from the corporate rating to the personal rating as well. We try to come up with the support to our clients from all types of entities so that they can identify their creditworthiness level and can consider it as their decision-making instrument as well. So the BDRL credit rating particularly provides an independent opinion, and our analysts are internationally trained, and we try to give the insights about the financial strategy of a company. And our purpose is to analyze the business and strategy so that the insights can be used as the input for the business decision making. And these are our services. As we mentioned, that we exclusively focus on the advisory, research, and the training of the in addition to the rating services. And by this time, like, we have already done more than 40,000 SME ratings since beginning and more than 350 corporate ratings. And in advisory, research, advisory services and other services, almost 80,000 companies got our services since its inception in Bangladesh. The uniqueness of the BDRL is a subsidiary of the global company. It gives us a lot of privilege of learning, as well as that standard and the benchmark, which is beyond the local regulation and measurement. So highly qualified and international trained human resources. As per our availability, we try to pick the best human resources for providing services or ensuring services for our client. Robust credit rating methodology we use, and this is our competitive uniqueness as well, that we try to capture all relevant aspects of the business to decide the creditworthiness of our clients, and continuous research and the economic and business issues always enlighten us and our analysts, so that our clients get the more contemporary and updated issues about their need, and the countrywide business network, which is also supportive for our clients. And our philosophy is that we try to find the truth from the data. So we have data, but our objective and the underlying principle is we try to find what is the real fact that data tells us. And our objective is that we want to explore the better insights so that business decision maker can utilize that insights for making their better business decision, which ultimately lead them to do business in a better way. Overall, we want to ensure the credible credit rating for the sustainable growth of the company as well as the whole economy. And we are very much privileged that, like, we got the panelists, like I being, in fact, is a bit nervous to get the panelists and also excited to get the panelists. Hope we'll listen from all of you and all participants will be enlightened. Now, I would like to hand over to the Samira for the next part of the program.
Thank you so much, sir, for your beautiful presentation. Hope our audience has learned a lot about BDRL and its activities. So now I would like to request Mohammad Nurul Amin, sir, to share his valuable words and shed light on today's topic. So do you want to say something?
Yeah, Samira, Kushal, will Kushal present that?
Oh, I'm really sorry about this.
Yeah.
So I would like to request our keynote speaker, Mr. Kushal Ahmed Imtiaz, for presenting the keynote of today's webinar. Thank you all.
Yeah, Kushal. Kushal, could you please unmute?
Oh, sorry, sir. Yes, sir. Okay, my dear distinguished panelists and respected audience, good evening in our monthly webinar. As our Honorable CEO Mahmood sir mentioned, uh, each month BDRL tries to arranges some monthly webinar based on some contemporary issues, and the main objective of our webinar is to connect the industry experts as well as the academicians in this platform so that we can learn from them. And also it's our corporate social responsibility to disseminate knowledge uh, so that everyone can be benefited from this from our discussion. So let's not lengthy my talks, and let's get to the to this concept paper presentation. Let me share my screen first, please. Okay. Yeah. Can you
Yeah,
see
Kushal,
my?
it can be visible. Yeah.
Okay, okay, sir. Okay, so our monthly webinar is now the contemporary monetary policy for fiscal year 2023-24. Actually, Bangladesh Bank uh, submitted a monetary policy for every 6 months. So it is the first half of the fiscal year 2023-24 monetary policy, and we try to dissect the monetary policy to see the implications and economic resilience or its relevance to our current economy. Okay, so let's start with our with some statistics of Bangladesh. So our current GDP size is currently stood at 454 billion US dollar. It's a provisional data. And if in terms of GDP growth rate, our GDP growth rate is slightly dropping, is around 6%. Next, the inflation is quite high, 9.74% as of June 2023. And net foreign direct inflow is stood at 3.44 billion US billion dollar. And our export import of goods and services, our export slightly increases from the 22 fiscal 22. It is now 55.56 billion US dollar, and our import dropped dramatically. It is now 69.96 billion dollar. So what is monetary policy? It's a very straightforward. As you know, monetary policy, the main primary target of monetary policy is to control the money supply, to promote the economic growth, and to employ strategies to control interest rate and inflation. So monetary policy is all about controlling inflation and interest rates, as well as to controlling the money supply, and all of which should foster economic growth and generate employment. And so we have two types of monetary policy. One is expansionary monetary policy, and another is contractionary monetary policy. And our recent monetary policy for 2024 is contractionary monetary policy. So the main factors that affect our policymakers when developing this monetary policy are those two events. One is COVID-19 and another is Ukraine-Russian war. And these and it stems from these two events, we have some challenges. And one challenge is from the economic sector, which is inflation. Our inflation is quite high at present, which is hovering around 9.7%. And our exchange rate pressure, you can see upward trend in our exchange rate against the US dollar. And the upward trend denotes that our Bangladesh taka is depreciating against the US dollar. And the substantial erosion of foreign exchange reserve, which is dropped to 29 billion US dollar as per our methodology, not the IMF. And the financial sector, the main problem is for the high non-performing loan, which is 8.80% for overall NPL. And so far, I could recall for government bank, it is around 20%, and for private commercial bank, it is around 5.96%. So our present monetary policy, the main objective of our present monetary policy is to control the inflation. And so all our discussion or majority of our discussion or majority of our objective is controlling the inflation. And you can present some comparative figure regarding the inflation. As you can see, we compared Bangladesh to Sri Lanka, India, Thailand, Malaysia, and Singapore in the recent months. It is the past 6 months of calendar year 23. So you can see that the trend are declining for all the countries but Bangladesh. So it's a very challenging task for us to put down the inflation or control the inflation to a tolerable level. And another two big objective apart from the inflation are GDP growth as well as the financial stability. And the driver that we use to control the inflation and GDP growth, as well as stabilize the exchange rate market, as well as the financial sector, especially the NPL, would be import growth, export growth, remittance growth, as well as foreign exchange reserve policy. Now let's jump to the our main topic. What are the recent policy initiatives that our policymaker took to control or managing the exchange rate and foreign exchange reserve? The first strategy or the first step they took is to improve the current account balance through incentivizing the foreign account inflows and containing foreign exchange outflows. And Bangladesh Bank also allowed depreciation of the rupee against the US dollar, and they allowed increasing foreign exchange supply. And for this, they took the following steps. First of all, the export retention quota has been reduced. So the garments exporter who will enjoy to encash the 50% of their export retention funds so more foreign exchange reserve or for more foreign exchange dollar would be flow into the economy. Then our net open position has been reduced, which means the balance of payment through the restriction on the import, and ease fund transfer through internet banking for remittance, and increased non-residential foreign currency deposit rate for the foreign wage earners, and simplifying the process for wage earners, remittances, and relaxation with the documentation requirement. And to reduce the demand for the foreign currency, the EDF interest rate has been increased to 4.5% from 4%, and all importers allowed all importers to extend their guarantees. So minimum foreign exchange would be required for in the initial stage for importing of goods, and extending majority of suppliers and buyers credit regarding the LCs, and allow domestic banks to borrow from the offshore operations in easy terms, and increased overall LC margins and advance payments for non-essential and luxury goods, and pre-authorization of LC over $3 million, which means that any company who would like to open import LC for over $3 million, that company must seek permission from the Bangladesh Bank first. Then controlling inflation and the policy initiatives are taken, including the policy rate. Basically, the policy rate is the repo rate, which has been recently increased to 6.5% from 6%, and increased standing deposit facility rate, which is now currently represented by the proxy repo rate, and which has been increased to 4.5% for 4.25%. And the objective of increasing the policy rate is to increase the cost of borrowing and limiting the inflation, and remove lending rate cap. So there was a lending rate cap prevailing in our economy, and recently Bangladesh Bank replaced the lending rate cap with the competitive market-driven reference rate supplemented by a margin. We talk about that later. And next, ensure market-based exchange rate and quantitative tightening. And the objective of quantitative tightening is regarding the foreign exchange rate, which is about smoothing out the intensifying exchange rate pressure and steep depreciation of Bangladeshi taka. And the strategy we take to achieve that objective is to inject foreign currency into the economy, and at the same time withdraw equivalent amount of local currency from the money market. Then stabilizing financial sector, and our policy initiative was the amendment of Bank Company Act 2223, and the objective is to identify and take appropriate punitive actions against willful loan defaulters and reduce families' influences on bank boards. You see that our loan default is quite high. NPL is around 8.8%. So it would be a great steps if we really can deploy this strategy and set some exemplary punishment against the willful loan defaulters, and revising the punishment. And apart from the revising from the Bank Company Act, Bangladesh Bank also revised the Finance Company Act, Bankruptcy Act, Money Loan Court Act, and Negotiable Instrument Act, and our respective government wings are now currently drafting of all those acts. And Bangladesh Bank plans to disclose the residual loans alongside NPLs of banks in the annual financial stability report, so that we can understand our banking sector's non-performing loans, and we have improved transparency regarding that, so that corrective steps can be taken. And Bangladesh Bank also has begun adopting the risk-based supervision framework, and this risk-based supervision framework would be aimed to implement it in the country's banking sector by 2022-25. And next two objectives were enhancing financial inclusions and cashless societies, which is basically the encourage the users of the mobile banking, and strengthening the capital market. Now, the new policy initiatives. These are the policies that our policymakers would like to deploy from July, or would try to deploy recently for the first half of the fiscal year 2024. So first thing is that the policy interest rate corridor, which is the policy rate, that means the repo rate. So consistent with global practices, the Bangladesh Bank implements a symmetric interest rate corridor centered on the policy rate 6.5%. And the objective of this policy interest rate corridor is to match the call money rate as closely as to the repo rate. Next, reference interest rate for lending. The reference lending rate, as known as the SMART 6-month moving average rate of Treasury bill, will be announced on the first working day of each month through the Bangladesh Bank website, and this will allow market participants, businesses, and individuals to access the up-to-date reference rate for the lending activities. For example, for banks, the lending rate would be smart rate and margin up to 3%. And for the non-banking financial institutions, the lending rate would be smart rate plus a margin up to 5%. And for lending activities for SMEs and small and cottage and consumer loans, the lending rate additional 1% would be added over a smart to cover supervision costs. Then exchange rate unification. The objective of exchange rate unification is to assess the movement of Bangladesh Taka exchange rate in nominal and real terms. Bangladesh Bank calculates daily and monthly indices for the nominal effective exchange rate and the real effective exchange rate. And currently, they found that the nominal effective exchange rate index currently stood at 82, and the real index stood at 100. And along with these two figures and their own research indicated that the current BDT USD exchange rate was around 108, and it is mostly market condition reflexive. So they would not require any depreciation of the Bangladeshi Taka at this moment. The calculation of gross international reserve as per the BPM6 or IMF methodology. Bangladesh Bank will compile and publish GIR as per the 6th edition of the IMF Balance of Payments and International Investment Position Manual starting from July 1, 2023. And these are the main topics for our current monetary policy. So I would like to invite Samira Apu to conduct the session to our panelists.
Thank you so much, Mr. Ahmed Kushal Imtiaz, for your very insightful presentation on the webinar topic on monetary policy and its implications for economic resilience. Now I would like to humbly request Mr. Syed Abdullah Al Mamun to have the honor to carry on our program. Thank you, sir.
Okay, thank you, Samira, for your nice coordination of the program. So here I'd like to take the privilege of listening from our eminent panelist. First of all, I'd like to go to the Professor Pinky Shah. One of the context and the dynamic for our monetary policy is that the interest rate up to 9% ceiling was going below to the inflation. As we can see that inflation is going to the more than our ceiling rate. So rationally and logically, our regulator come up with that response and try to try to make it as a more normalized from the negative real interest rate. So how do you assess the context and the response of the regulator and the looking forward? How do you measure that of this context? Yeah.
Thank you very much. First of all, I would like to thank BDRL and Dr. Mamun for inviting me for this very challenging and interesting time with this challenging topic, I should say, because I myself feel, and I think most of us feel like this is a time of great crisis for all of us, because around the world, we are all facing different types of challenges. It's not only Bangladesh, and that's starting from rising inflation everywhere. There are emerging shortages of foreign currency. People are having problems in consumption because of high prices. At the same time, if we see the different groups of the economy, they're all getting different types of impacts. So coming to the point, which you just raised, that's about the interest rate. Bangladesh has, I guess, taken very right approach at this moment, because we are already having this lots of other external crises, starting from Ukraine war, energy crisis, and rising inflation. So the monetary policy, which is of contractionary nature this time, whose main target is to control the inflation, because inflation is one of the major causes for many of the problems. And one of the very important instrument to control this inflation could be the interest rate. And we all know that in Bangladesh, the interest rate was around 6% to 9%, starting from the saver's point of view and lending point of view. So that has created some problem, because at the same time, the rate of inflation, which is currently nearly double-digit inflation, 9 point something, which is not at all a good sign. It's a concerning issue. And honestly, most of the countries try to maintain this in between, 2 to 3%, which is single-digit inflation. So there are so many concerns. First of all, this nearly double-digit inflation, which is creating lots of challenges for businesses, economies, individuals. At the same time, this interest rate, which was a bit lower before. So we have seen, due to that interest rate, which was prevailing in the Bangladesh, has, made the private credit a bit lower, which was not okay for the economy. At the same time, the individuals were getting less interest on their savings. So general people were actually not very much benefited out of that. So this time, in this new monetary policy for Bangladesh, which has given some liberty to the banks to fix their interest rate, because the repo rate and reverse repo rate has changed a bit. So this, I guess, will give some liberty to the banks, and they can fix their interest rate plus minus 3% higher or lower. And I believe this margin will create a type of fairness for the savers. At the same time, the lenders can also benefit it. So I think that's a good sign and a good step to control many of the indicators of the economy, and it might create impact on our import and export as well. So I think this is a good sign, and it might create impact, but we have to wait for a while to see the impact. Yeah.
Okay, thank you, Professor Pinky Shah. So now would like to listen from one of the CXOs who has to face a lot of challenges in the context of high inflationary and instable exchange rate, and in the pressure of forex reserve, as well as an energy crisis. In such an adverse situation, definitely Mr. Aman, as a CEO of an energy, electricity company, definitely faces a critical situation from both sides. One is that inflation that rises the cost of the energy. On the other hand, the crisis of energy has also created a pressure. So for the new monetary policy, when the inflation, interest rate will be floated as per the market mechanism, the mechanism under the benchmark rate of the SMART. So definitely it will be more than 9% now. So how do you consider that it will affect your balance sheet and your operation? So on the one hand, from the banker's perspective, and another from the corporate perspective. So how do you assess these measures from your perspectives? Yeah, Mr. Aman Hossain.
Yeah. Am I audible to you?
Yeah, we can. We can listen. Yeah.
Okay. First of all, thank you. Thank you, Mr. Mamun, for inviting me, for being here, and to talk with such an what I can say timely and very crucial topic, particularly important for Bangladesh in this moment. Also, thanks to other panelists and respected audience. Very good evening. Assalamu alaikum. Yes, in recent monetary policy, reference rate has been introduced, and due to these reference rate, definitely interest rate will go up undoubtedly. And there are two impacts. One is why this reference rate. Definitely, if we consider the quality of monetary policy, definitely we will welcome this initiative of central bank reference rate. This is very well established and very what I can say effective way of setting interest rate, rather setting a fixed cap 6, 9 or any other figure. But this is a good move from Bangladesh bank side. And from business impact, definitely this will have, I can say, comparatively adverse impact on my business, because due to this high cost of capital, I have to pay more interest, and this interest definitely I have to book in the cost of the product and cost of the imported product. So ultimately, product cost will be higher, and people have to buy with more price, that I can say. So it will depend actually how the central bank and government is controlling these what I can say, the published monetary policy, because the reference rate is depending on the last 6 months weighted average treasury bill rate. So if this treasury bill rate can go independently, then we can say this, yes, the market reflection, and banking institution will add 3% and other institution will add, non-banking financial institution will add 5%. So this is the maximum limit. So another challenges might be the how government, central bank will maintain the implementation in the same way, because in last week even there has been a circulation from central bank regarding these issues, and that is for the pressure from, I think, the export oriented organizations in Bangladesh, and they have reduced 1% interest rate. This is the latest circular from Bangladesh Bank in either in last Wednesday or Thursday. So already we have deviated from our initial market monetary policy. So to what extent we will be able to maintain this strategy independently to go in future, this will also have impact on the what I can say, the market-based reference rate. So definitely come to the point what you have you want to know, that is the impact in business. Definitely it will have I can say the adverse impact on my business, because product will be higher and people will buy with more, people have to spend more money. So I think there is a dilemma here, because due to this interest rate, high interest rate, and due to this tight monetary policy, definitely cost of money will be high, cost of interest will be high. At the same time, the product price is also high. So we are monitoring, we are controlling the money supply, but we due to these impact, inflation is going up. So undoubtedly we have to do one thing, that is we have to ensure the supply of commodity, which is very difficult for Bangladesh country, which is mostly import based. So I think this will be the challenging part of this monetary policy, particularly about the interest rate increase, and particularly for the tightening the credit to the loan to the market. So this will be a two-sort effect here. Yes, inflation, if we took the product supply and the service supply to the market, if we cannot increase the supply of product and services, inflation rate in management difficult. Thank you.
Thank you, Mr. Amran Hussain FCA, for your opinion and for your insights. So now would like to listen from the legendary bankers and the expert in this area. So who always work very closely with the policy level in the company as well policymakers. So Mohammad Nurul Amin sir, we'd like to listen from the bankers' perspectives, like due to this market-driven interest rate and other like complementary measures, monetary measures have been taken. How the bankers should re-strategize themselves, the banking management, to take the advantage of these policy measures and put their business in the coming days as per the context of global as well as the local economic challenges. Particularly, this is an election year as well.
Yeah, thank you very much, Dr. Mamoon. Thank you for the keynote presentation, and I am enriched by the sayings of previous two speakers. My point definitely will move around the banking and of course banking sector and its functionings and operations, how it really monetary policy will impact this. Firstly, we welcome this monetary policy because there is a paradigm shift. Paradigm shift means it has been changed to establishment of the interest rate corridor as a monetary tool. That is most important. It was introduced a reference rate for banks, which is most important now and a matter of discussion in the monetary policy, the SMART, based on the 182 days treasury bills. And Bangladesh Bank definitely will make a transition from monetary targeting framework to interest rate targeting framework. That is most important. Interest targeting framework is very important in this monetary policy, and this is a major shift from earlier conventional monetary policy statements, which have started since 2006. Now, for this 6 months, I hope the keynote presentation covered almost everything, and beyond that also, beyond monetary policy also. But my points will be very specific. I will just tell that what the things we should look at. This is important. The paradigm shift, the SMART, what the things we should look at. We observe that there is no change in government incentive package and special fund and credit card rate. One thing, 6 months tenure will be taken to change the interest rate of a loan, even though every month the SMART rate will be announced. The SMART rate will be effective for the month, announced on the first day of that month, calculating the previous month's SMART. Then are we ready with the structural to remove the structural bottlenecks and governance issues in the as it was in the conventional system? And I personally believe that there is no policy for improving competitiveness of banks. Interest rate is not the only measure, only criteria to build increased competitiveness. And controlling inflation, which is most important, I will discuss in detail in 2 or 3 minutes, how it is lacking or how it cannot really and effectively control this inflation rate, which target is taken at 6%, but presently it is now near to 10%. There is no specific ways for doing for reducing this rate. Another observation is that it will make not make much difference in lending rate. In this sense, when it was 9, it was negative also compared to the inflation. Real picture is that, as you mentioned also in your early deliberations. But one thing we have to see that why this smart rate or this increase in policy rate has been made. Is it donor driven or market driven? Which is Mr. Imran mentioned. Is it market driven or it is instructed by, I mean, the donors? Then will Bangladesh Bank will be able to work independently to change the rate around the smart, because it is almost a fiscal measure, because treasury bill rate will be fixed on the variation of government borrowing. Bangladesh Bank has nothing to do with it, because when government borrows more, maybe demand for money more, treasury bill rate may increase. When government will not borrow more, a reduction in government borrowing will reduce the treasury bill, as it happened 2 years back. Central bank government has deposited more money to the loan than taken from the banking system. And this year, election year is okay, but this year you will see that June ended 2023, government borrowing from central bank was 150,000 crore taka, and from banking system it is about 250 lakh crore taka. So there is 4 lakh crore government borrowing from the banking system. And in coming 6 months, so fiscal year is 1 year, will it be reduced? Will the treasury bill rate will increase? Is still the bond rate is more than 9%? I hope you know. Bond rate is 9.1% for 5 years, and it is more for 10 years and 15 years. That is one important question. Again, if government borrowing is more, the auction of bond and treasury bill, the primary dealers, will they get enough money to support their liquidity, or they will have to go to that highest rate standing lending facilities, which is 8.5% interest rate. That is most important for banks, whether liquidity support will be given to the banks, to the primary dealers as per their requirement. Now the situation is that government by central bank almost last year supported banks with $13 billion, and the equivalent taka, equivalent money has been mocked up from the system. The debt that created a pressure on liquidity, and definitely government tried to reduce the private credit growth, which this year already targeted as 10%. As Mr. Imran said, this may impact private credit growth and imports. As an import-dependent country, when we import most 70 to 80% raw materials and capital machineries. These 6 months of this year, if we cannot import raw materials or capital machineries, it will have adverse impact on production and employment also. This is most important. And as for inflation, am I talking more about taking more time? No.
No, it's okay. Please, sir.
Now I come to inflation. You just see this 6% target is a challenge when it is now nearly 10%. Monetary policy is contractionary. I hope you will see that fiscal policy is expansionary. Then government may need more money, and they may have to borrow from this system, either central bank or the commercial banks. How central bank hopefully cannot control the need of government borrowing, cannot dictate that. Definitely, Ministry of Finance plays the supreme role in this place. Then again, Bangladesh Bank cannot independently decide because Treasury bill rate will vary with the government borrowing. This limits the effectiveness of MPS or IRC. IRC means interest rate corridor in controlling the inflation. Another thing, though, this is the reality in our country now. I hope Mr. Amran will also, as a business CEO, will understand. How can you control this syndicate and market players who play with the prices? This is most important. I put this question, the happenings of last 6 months in variations of prices of different commodities. FMCG companies who control the market played the role, and it has come down to the green chili also. My question is, how effective will be the monetary policy in containing the inflation? And of course, monetary policy this year has taken some new measures to unify the exchange rate, which is very difficult. We last 1 month we have not seen any sign that it will come to a unified rate. This is another important aspect that monetary policy is at challenge. GIR, gross international reserve, is now calculated as per IMF prescription. So hopefully this will reflect that what is our real situation, and in future also will be taken care of that. Many the increase in reserve will not annoy us, that what we do with this huge amount of reserve. This is the sovereign money. This belongs to the people of the country, not to the government or not to the central bank. So there should be, hopefully you will be careful. GDP growth target is kept at 7.5%, and financial stability, there is some narrative in the monetary policy about the financial stability, which refers to NPL mainly. But I would say that reform in banks, and of course the governance issues, the role of board and the coordination between board and management is very important for banking sector to do the due diligence and play the role of the what should I say, main artery of the business and bank business money supply is bank, where our capital market is in a weaker position and people does not go to the capital market for their equity money, increase the equity and capital. Thank you very much. Hopefully,
Yeah. So
Yeah.
thank you
I
very much.
understand.
Yeah, thank you very much, sir. The last statement, which in fact also explicitly mentioned in the monetary policy, that reforms of the financial sector is essential for curbing particularly the NPL, which is really is a great concern for the whole economy and its stability. So in that respect, like when Nurul Amin sir also mentioned that, like when we talk about the reform, then the main reform is coming up with the governance, the initiative for improving the corporate governance of bank, financial institutions, as well as other market participants. So I would like to just request the Professor Pinky Shah, like how do you underscore the reform initiatives, how more robust initiatives should be taken from the regulatory perspectives and the policymaker perspectives for reforming the financial institutions, so that the monetary policy can, because the effectiveness of the policy also depends on how well governed, or what is the level of governance of the market participants. So how do you underscore the importance of that reform, and how the policymakers and the regulators should move forward with that reforms initiatives?
Thank you, Dr. Mamoon, for giving me the floor again. So as the panelist and Mr. Imtiaz also talked and given a lot of detail about the different types of changes and the impact on different sectors and different stakeholders. One thing which I feel like as if there are lots of macro variables and we are trying to think about the impact of interest rate on different stakeholders in different sectors, but at the same time, we should also think about the exchange rate. So here it was a bit controlled before, but this time the liberty is given there as well. And I personally believe as an academician and economist that it might create a bit positive role in long term, because there also the banks are, supposed to work as per the market forces. So it might create, and this is a type of rationalization of the exchange rate. At the same time, the currency is also depreciated. So even if we are the import-based economy, but this might give some different diversion to the domestic producer, the farmers, the agriculture sector, and many new products will come to the market because our export will become a bit cheaper, and that will give a new horizon, new window of, export earning for the Bangladesh. And this might in long run create positive impact on our exchange rate. At the same time, this will also give some belief to the people who are working outside, and the remittance may increase to the country. And we can see a bit of slight, I should say, a good silver line in the crisis, that this is a bit increasing. So these are some of the things which I think could play important role in long run. Again, when it comes about the governance, one thing is very important, that even if we have so many policies we're trying to deal with, and we have different interest group also, but at the same time, the governance should be taken very strongly. And again, at the same time, the regulation should be also taken care of, because we know that non-performing loans are really higher, like one of the panelists has already said. At the same time, if we don't try to put our policies a bit stricter, then we might fail in controlling the market. So I hope, and I think most of us believe, that we should go for a bit stricter regulations for controlling many of those market forces and indicators. But again, at the same time, economic theories also say that we cannot control everything together. So here we have to prioritize that what we want to control. And inflation is one of the biggest challenge for all of us. So we went for the contractionary policy. At the same time, we try to control the other aspects of the market as well. So I think most of those indicators may play a bit good role, and we are just hoping for the better future, better responses from different sectors. So altogether, I hope that it might play a bit good role, but at the same time, the regulation should be a bit stronger. That's very true. Thank you.
No, thank you. Thank you, Professor. So here the interrelationship among the different initiatives is also very critical. And in spite of inflationary pressure, crisis of foreign currency or foreign reserve pressure, in spite of that in interest rate issues, and also the global market dynamic, the last 1 year we achieved a tremendous growth of export, like it is around 6.7% growth, with a landmark of $55 billion export has been happened. Now, question is that in the coming days, or the coming context of the tenure of the new monetary policy, due to the benchmark interest rate, the businessman needs to bear more cost of capital, and inflationary pressure is going on, so they have to bear more cost of raw material. And due to the market-driven exchange rate, definitely we have to pay more input cost for the, as we are substantially depends on the import. So my two question to Mr. Amran Hossain FCA, that like, do you think that like in spite of these all pressure, like before, like as a paradox, like we have seen in the last year, in spite of all these adverse parameters, our export was growing. So do you think that our businessmen, with their strategy, with their like uh, resilience business strategy, I must say that, because they have been demonstrating last 3 years. So do you think that it will be also continuing our export growth? And second question is that, how do you think that all CXO or all sort of manufacturing company should look into to improve the productivity, which is also a complementary instrument of controlling inflation as well as an foreign exchange, like currency in deflation. So what sort of strategy the entrepreneur as well as industry CXO should take for improvising their productivity to complement the initiatives of the monetary policy? Yeah, Amran.
Okay. Yeah. Thank you. Thank you for giving me the floor again. Yes, there are two questions. I want to start from the last question. That is how productivity. Yes, undoubtedly. Nowadays, irrespective of this monetary policy and other factors, for a businessman, particularly the manufacturing concern, we are working for this productivity as well as efficiency for last couple of years. This is the only important way to be competitive in the market, in the global market and local market. So productivity, if we don't keep this monetary policy in mind, apart from this monetary policy, definitely every manufacturer and every businessman is focusing on that skill. So this is the way we can increase the productivity, and we can get the benefit of economies of scale, what you can say. Also, the manufacturing cost will be lower and my productivity will be higher. By this way, cost of a product will be in overall will be lower. So this is a move in, I think the most of the concern in Bangladesh as well as the global is striving in this moment. And due to these focusing on these issues, maximum businessmen in Bangladesh and globe are going for shifting their technology from manual based or for semi-manual to automated and artificial intelligence. These are actually we are thinking to use in our manufacturing process that will help us to increase the productivity. So definitely productivity is important. If I consider this monetary policy, if I relate this monetary policy, the importance is productivity will definitely will be increased. So this is the utmost requirement in this moment. So definitely the cost, the interest rate, higher interest rate will increase the cost of manufacturing and cost of product also. So if this interest rate, what actually we are discussing all are theoretical. So definitely after going 6 months, we will see how actually this theory has been in place. We have to consider our country's legal environment, political environment, as well as the governance, level of governance. Also, the interference to this market-driven strategy, and what level, to what level actually the government and central bank and the regulators will intervene. This will say after a couple of months later, really is it a market driven or still regulated? So we believe, I want to believe These will be market driven, though a fundamental change has been made through this recent monetary policy. Structural change has been driven, and I don't want to go why this change has been come here, but I must appreciate central bank has moved to the what I can say effective to the realistic and market driven strategy. I appreciate this, and my request to also move all this strategy based on market, not to interfere and not to regulate and not to what I can say make any hinder in going to the market level. Because in earlier discussion, your question was due to this interest rate and inflation, what will be the relationship? You know, in last 6 months, you know, the 70 to 75,000 crore taka has been new note has been circulated in the market. So this has also a negative impact of the inflation. So considering this, I am considering that interest rate will move as per market driven stimuli and market driven factors. And if I consider this and if I keep in this mind, definitely what you have said, the manufacturing, productivity in manufacturing, efficiency in terms of cost efficiency, manufacturing efficiency, time efficiency, process efficiency. This is undoubtedly unparalleled, and this is the mustly needed for the manufacturing concerns in this moment. This number one question. And your first question was about the exchange rate, unified exchange rate and foreign currency reserve pressure, and how export will move in future. You know, today we are discussing about only one factor of business, that is the interest rate, exchange rate, reserve. You know, business depends on lot of other factors, which is not accommodated in this fiscal policy, a monetary policy. These are the business environment and business situation in this moment currently prevailing in the world, particularly post-COVID and during this Ukraine-Russia war. We are facing a lot of challenges apart from these monetary issues, apart from this higher interest rate, apart from this exchange rate and other issues. Globally, we are facing shortage of raw material. We are facing with the global supply chain crisis. You know, my product one what actually I imported from UK, it was there was a lead time of only now this lead month. So I have to consider this also. And price rise of every component, every moment this price is going up. So business is depending on lot of factors which is not mentioned in this monetary policy. Yes, this is one important factors what a businessman should keep in mind. And if I consider all other factors in this moment, current world global recession, our country's higher cost of capital, I think and export market actually depends on few other factors like the importers. What options are open to them? Bangladesh is, so they will, I believe they will come to Bangladesh and they will remain with Bangladesh in some sectors, particularly footwear, garments. These sectors, I believe, importers will import from Bangladesh due to a lot of factors. I don't want to go in details in this discussion. So by considering these issues, I believe export will remain same and will improve even because world recession, you know, is improving day by day. and in some cases their inflation rate also they are managing very efficiently. By this way, global requirement will be increased, particularly for the product what Bangladesh export to the countries, developed countries. So when those products requirement will be increased, consumption requirement will be increased, definitely the export, automatically export will go up. Yes, the factors affecting the monetary policy, particularly action rate, interest rate, the export in future. One point I want to mention: this policy should give the proper way to move away as per this policy. This should be this should be what I can say, truly market driven. If it is truly market driven, then actually who will lose and who will win, I don't know. The economy will get a portion of the economy. And this is the effective and this is the most important factor, particularly for the upcoming monetary policy, so that they can take the remedial actions if required. And if this policy go very well, and we will be, if we accommodate with this policy, with this need, I think this will be continued in the future also. But I appreciate, again, I appreciate this initiative of central bank for going with this.
I think, yeah. We
There
can-
is a connectivity. Okay.
Thank you.
That's it. So I think if consider everything, I think it will be a very good move for Bangladesh as well. Thank you.
Thank you. Thank you, Mr. Amran Hossain, FCA, for for explaining the issues in a very wider way. Now, we would like to listen the final comment from one of the eminent bankers like Mohammad Nurul Amin. Sir, are you here?
Okay, I'm listening, hearing.
Yeah, sir. We'd like to listen one comment or one opinion from your side. That is, like we got the monetary policy in such a situation, like inflation is going on up, and Taka is depreciating, foreign reserve is under pressure, cost of doing business is negatively affected with all these variables. In addition, which is very natural as well, due to the political tension of considering the upcoming election, it has also an impact on the cost of doing business for the organization. And this is very natural for the democratic country, in an emerging country like Bangladesh. So, but this is a factor for the business. So how do you think that this monetary policy in one way is trying to control the inflation? On the other hand, to what extent that political tension or uncertainty can create the impact on the cost of doing business, and what are the further measures regulator may take so that our business environment and our entrepreneur are not affected, and we get the effectiveness of our monetary policy?
Thank you. This is really relevant now because we have a development narrative recognized by the world also. People at home and abroad appreciate this development narrative, though there are some governance issues, of course. Central bank this year has shifted to some new things, as we mentioned earlier, interest rate based money supply and lending and deposit rates hooked with the treasury bill rate of 182 days. That is a good and new idea. India has introduced this long back. Sri Lanka has also some reference rates. Nepal even has got this interest rate corridor. And Turkey has it, Canada has it. So this is not new in the world, but in our country, this is a new thing. And there is much discussion about this. Through this IRC, interest rate corridor, inflation control will be challenging, but this is a step. Challenging because of the situation you have just mentioned, political uncertainty, though our private business entrepreneurs and business class learned how to manage this political disturbances. We have seen that 4 or 5 years back during the hartals and other issues, how the export people did their job nicely. And because due to COVID also, during COVID also, though there was a supply chain disruption abroad, but our people has managed this, and really export has not fallen so much as we thought of, and remittance also increased. So we have to look to the demand side and supply side. Government borrowing from central bank is purely minting money, and that fuels inflation. No doubt about this. This central bank who has announced this policy from last 2 years, from 2021-22, has not used the monetary tools to contain inflation. Over the world, all over the world, even in our neighboring countries, has raised interest rate, policy rate, and of course, a developed country like America has changed it 10 times, and they are successful in reducing their inflation rate. In our country, this has not been changed for a long time. Now, this has come to a reference rate. This is most important, that the call money rate will hover around the repo rate, 6.5. It will not shoot up 8.5. It will may not go below 4.5, the lowest and the highest, as we have seen in the monetary policy stance. So inflation control will be challenging, but this is a step that other things working well. I mean, the production side, the supply side, the disruptions, the syndicate role, and of course, the political situation does not hamper our production and supply chain. That is most important. Only interest rate will not help that we can contain the inflation, because there were developments in the country when the interest rate was high also. Group of companies developed in this country during high interest rate regime. That is also important. Things are changing, days are changing, people's awareness has been changing. So people always think that the supply of fund or cost of fund should be lower. Accompanied this, we must look to the cost of doing business. Cost of doing business includes cost of fund. It's not the whole. Interest rate and money supply or credit supply more means production or some other things will be okay, a supply chain will be okay. But cost of fund, the logistics, the transportation, and the international price, other things also impact this inflation, of course. So it is an attempt. We welcome this, but other things must work accompanied with this interest rate, and of course, the lower private credit growth target is also an indication that money supply to the business may be lower, may not be expansionary, but government borrowing, because government fiscal attitude is expansionary for the development of the country, it may contradict and control in controlling the inflation. This is my personal belief. Thank you.
Thank you, sir. Thank you for your valuable opinions in this respect. I think this is challenging. We have been, as a country, we have been facing the challenges for last 3.5 years, particularly. And in spite of all challenges, our economy is moving forward. And coming challenges are more acute due to the newer context we are going to face, that is very unique to our economy and our country as well. There is an political instability, and also a few global dynamic is also changing. Particularly a few of the European countries are still suffering from the high inflationary pressure. So with overall context, we have to appreciate the initiative of our regulator. They come forward with their best effort and the measures, and which we think from the BDRL perspectives that all the instruments and the players needs to work together to achieve a common goal. That is, we have to control the inflation, we have to increase productivity, employment, and market void should be minimized. And the market mechanism on which we are going to rely, that should be more efficient and the trustworthy. Definitely without the presence of any kind of syndicate or the artificial influencing in the market. So then I believe that we can expect the control of all negative movement of the variable, and all the positive movement of the variables can be expedited. And with this expectation, I would like to conclude my part and would like to hand over to the Samira to conclude this session. Over to you, Samira.
Thank you, sir.
Dr.
So
may I
once
just
again,
point here? Sorry
for
to
me. Okay, ma'am. Yes, sure.
just one more point was coming to my mind, like sir
Sure.
told about the import and all other things. One thing is really good for us, like even if the cost of capital will increase, but we can see that the people will be a bit inclined towards the domestically produced goods. Okay, that will be a good sign because our import will be costlier. So even if the cost of capital will be higher, many new startups which are coming to the Bangladesh will get the chance to start the business, and they will get the loan from the bank, because when the interest rate was lower, most of the big corporates got the loan. So they were very selective there. So here they might get the loan and they might do the business, and that might bring a new dimension to the export, at the same time foreign currency reserve to the Bangladesh. So I think it might play a greater role in future. Yeah, thank you very much.
Thank you, ma'am, for adding your valuable thoughts with us again. So once again, I offer my gratitude to our honorable panelists, Mr. Mohammad Nurul Amin, Dr. Pinky Shah, MD Amran Hossain, FCA, and our keynote speaker, Mr. Ahmed Kushal Imtiaz, for sharing their insightful analysis on the topic. I would also like to thank our moderator, Dr. Syed Abdul Mamun, for successfully carrying on the program, and my warm thanks to all the audience for staying with us until the end. BDRL will continue to arrange such programs every month, and we believe we will have your presence on them. So those who have missed the beginning of this program, you can watch this recorded video on the official Facebook, LinkedIn, and YouTube pages of BDRL. Thank you all. Stay blessed and good night. Thank you.